Hello guys. How we doing tonight? Might be a little weird with the mic for a second here. Give me a sec getting set up. Let me confirm that I am on the correct device. There we go. Can you guys hear me all right? And in a second here, you should be able to see my screen. I'm sorry for stopping the music a little earlier today, but truth is I like Kanye, but I can't handle him for too long most times. What's up, Krabs? Nice to see you in here again. Can you guys hear me? How is sound? Someone give me a little confirmation here. All good. Awesome. How are we feeling today? Right? We had a pretty standard classic bye week, right? We'll look at it here. And this is something, right? I have a few students in here. You guys will recognize this. But whenever I teach them how to look for a daily bias, it starts by backtesting, right? And studying how price interacts. And if we look at this week, it has been literally picture perfect, right? Inversion fair value gap. And yes, I draw it using the volume imbalance, by the way. I didn't think I said it in a while. So there it is. Had your premium and efficiency tell you that price is going higher. And then the aggressive close through here told you could start looking for longs on Thursday. Now, Friday, is this the most beautiful PA we see? No, but NASDAQ is on crack half the time, right? It is very, very volatile. And if we look at ES, its partner, but that is oftentimes more consistent in its move, it was a very clean day, right? What did we do on ES? We took out previous day high, ran a tiny bit more. We did not take out this high, which would have been perfect, but we induced this high and then formed a retracement. Where are we retracing to? Well, ICT teaches about 20 to 30%. So let's actually look at those TGIF levels that ICT calls 20 to 30% retracement of the week. Textbook, right? But then we start to look at NASDAQ and we see that, well, first of all, NASDAQ didn't take out the high. It did reach these levels. It just went a lot past it, right? NASDAQ is one of those that is a little more aggressive, right? But what did we do? We retested this high, which we closed aggressively through, and retraced into a daily fair value gap. On days like this, truth is, as long as your move is justified, you can justify both ways, is what I'm trying to say. So you could justify a long bias just as you could justify a short bias. For myself, when I open my charts, I'll talk about it in a second once we go down the time frames, but initially I was looking to long. I was seeing these equal highs and I was like, okay, well, let's go take these levels out before going lower. We did not. Did we need to? No, because there was SMT, which we can clearly tell with the candle to candle SMT or the swing point, right? So there was a lot of higher time frame SMT on the highs, which would tell you that you were going lower. But with this price action, you could have anticipated that we were at least going to go towards high of the week, pretty much. So both directions, using the logic that I teach, were justifiable. Now, yesterday, I talked about this and I said that the important part of a bias, at least for me, with my thought process, is not that you are only trading in that direction because that's going to be the best move. Because if your bias is correct, you're going to be trading in expansion rather than a retracement. So that's an important part. But the most important part of a bias is the fact that you now have a rule that says you can only trade in a direction. That is the strong aspect to it. And if you follow the RISE model, there is no need to build yourself psychologically. I've been thinking about it at length, and it's like, you don't have to think about, is this a good trade or not? You can trade every single model that is perfect, and as long as you have a bias, you'll be fine. And we'll go look at that in a second. First, we'll dive down to the 15-minute, right? Just look at the daily price action. What do we see, right? You see this vertical line right here. Red line is the news. I've been messing around with this. By the way, the new version is going to be coming. The only difference, this is one of my indicators, by the way. In official links, you'll find it right away. It is a very simple indicator to draw vertical lines and horizontal lines at specific times, right? I want to see my midnight open. Well, I have my midnight open. but I am bringing the addition of having infinite custom times. So you're going to be able to add as much as you want. Coming soon. I don't want to say too soon, but probably over the next 2 weeks, I'm going to start working on this. But I've been using it a lot with the news, right? I like to have a vertical line at the news, as you'll see right here. I have that setting on. And just to be able to visualize the price action. And just look at this line. What did we do in the day beforehand? Consolidation, right? You could frame this move perhaps as manipulation, but what were we lacking? SMT. You had SMT at those highs, but you had no SMT previously, so it's hard to frame this move as manipulation. But even if we just look at this from the midnight open, what is that? Consolidating. We call this accumulation. Afterwards, when do you expect your manipulation to occur? High impact news time. Right here, 8:30. Well, 8:30, actually, we don't have 8:30 news. We just have an 8:30 Judah swing. The news was at 9:45. So that's actually a little bit special. It was just so beautiful that I did not think on it. But the news is here specifically. But your Judah swing started at 8:30. That's beautiful. Right at 9:30 open, we went lower and then formed that Judah swing higher. So it just looked so picture perfect with 8:30, but it was still with the last day's settings, I guess. Sorry about that, guys. But looking from this, what are you interested in? We took out high of day right here at the time of the news, and you had higher time frame SMT, right? You can clearly see from the levels we have drawn out. Let me just give me a second here. From the levels that we have drawn out here on ES, right, our two gray lines that we just looked at on the daily, and that's our first gray line right here. So there is some SMT at this level. NASDAQ is unable to move higher. Personally, I wanted to see us take current week's high. And if you look at the distance from this, I think it was 15 points. Yeah, it's like 15 points to the tick if I was going to be precise here. So from this, for me, this is just inducement. So this is going to be a very high probability objective in the next coming weeks, sure. But for today, we did not need to go reach this. We had a lot of higher time frame SMT. We had some SMT just at this level right here at your news release, right? Time-based manipulation confirmed by SMT. You had everything you need to start looking for shorts at this point in time. But as I said, before that point, I was looking for longs. Now, do I recommend to be trading before high impact news? No. Do I do it? Yes. So I can't tell you guys not to do something that I personally do. For me, it's just about keeping a routine. I need to be in front of my charts at 9:15 so that I can do my analysis. And at 9:30, I start trading. And sometimes it's very hard for me not to take a trade. So what I'll do, I think I told you guys yesterday, I'll just place a feeler out there. I don't want to fight. I don't want to FOMO into positions. So what's an easy way to do that? Okay, well, I'm going to pay the market something so that I don't fuck up. So I'm going to pay the market one contract, 10 handles. So I'm going to pay the market $200 to make sure that I don't lose $1,000 trying to enter a trade too early. That's how I personally see it. Now, you can call me delusional. You can say that that's just a bullshit excuse you tell yourself, but that's what works for me. And it's all about how you think about it, all right? Just in general. So personally, I think it's okay for me to do this. I feel comfortable paying a certain amount of money to allow myself not to look for a trade too aggressively. So personally, I took a long, right? And you might think, oh, did you take the long just before the news? That worked out beautifully. No. I took a long off of a 30-second inversion fair value gap right here, and I closed it out about here. And yeah. Was it a great trade? Not at all. It was me placing a feeler and then being like, we have news in 5 minutes. What am I doing? And closing it out. So nothing much happened here. But enough talking about me personally. This is almost sort of like a daily journal for myself as well. So I like to tell you guys what I traded, what I was thinking, right? As I said, right? Thinking that we were going to go to these highs, being an objective. Right, my whole trade was framed around, okay, well, let's wait until 10 a.m., take out these highs, and then we can see a 10 a.m. reversal to go short where, which I do realize I forgot to say, but London lows. right? London rate framework is something I talk about quite at length, quite a bit. And if we look from 2 a.m. to 5 a.m., 2 a.m. to 5 a.m. right here, and we look at the range from that London kill zone, then you'll see that overnight we took out the high, and then later we went to take out the lows. I believe I posted on Twitter today the dashboard, today's dashboard on the Rice Statistics app. What's up, KSM? Every time I see your name, I think about KYS or KYM, which I used to see a lot in video games. If you don't know what it means, please don't search it up, okay? But I used to see it a lot playing video games, so now it's every time I see your name, I get scared. Whatever, right? But looking at this once again, right? I used the today's dashboard from Rice Statistics. Very high probability. We were seeing 74% chance of taking out the high of London, which of course we did, followed by 88% chance to take out London low by the end of the day. So that for me is just textbook. I love this framework. I trade it every single day. I almost drop everything when I see it. And when you have confluence from a higher time frame point of interest, then there's nothing more I need, right? So London low was a clear objective. Now, to get back into the entry, at news, what do you get? You anticipate that it is manipulation. You already have higher time frame SMT, so you don't need any sort of more recent SMT, but just look at this beauty. Judah swung higher. If you look at a yes, beautiful SMT all along the way. Now you might say, well, look, there's SMT here, and then we invalidated it. Sure, but I don't have a breaker yet, so I don't have a trade. Hence why I love trading unicorns. And where is the first breaker block to form? Right here. Breaker block right here. And what am I looking for after? Well, I'm looking for an overlapping PD array. I don't have a bearish fair value gap here, but I have a bearish inversion fair value gap. Textbook, beautiful entry, SMT at the top right here. And if we look at this entry, you also have a very nice tight stop loss of 18.25 handles. Now looking at this, of course, your first take profit is not going to be London low, but that is your clear objective. Truth is, I saw this trade. I believe I even posted about it. I said, I so want a short right now. I said that right at 10 a.m. In general. But I did not take this trade. And see, those are the types of trades where it is not an A+ setup. Why? Because we induce these highs. So there's a probability that we're going to go up here and then we're going to go down. But I need to teach myself that it's okay to lose. When you're so focused on consistency, it's very hard to accept these sorts of things. So for me, I saw this move and I said, it's not good enough. It's an A setup, right? Mechanically speaking, it's not a perfect setup. But I still trade them. From my backtesting, I found that I should trade A and A+ setup. A setup, what does that mean? There's one thing wrong. Not there's one thing missing. I always need my unicorn, I always need SMT, and I always need my breaker block, which is part of the unicorn, of course. But for example, that the R is a little too low at the partial. All of a sudden, that's not an A+, that's an A setup. Or we just induced higher time frame liquidity. That's not an A+ setup, that's an A setup. I should still be trading them. I don't regard today as a mistake since I saw it, but truth is, I should have been in this move. So I did want to be transparent with you guys and tell you that this perfect setup, I did not trade. Looking at this, where are you going to take a partial? Wow. Midnight opening price right here in purple. With this logical liquidity target that I believe Kane likes to call them, equal lows right here. Well, relative, of course, but this low is inducement of this liquidity. That is just picture perfect, right? So that's a clear partial. But now, am I really going to hold on to my trade and risk coming for a loss when I'm up 3.53R? Personally, no. When I double the amount that I risk, which means to risk to reward, I like to take profit. That's just how I like to do things. So as you can see right here, when you have this take profit, oh, we just hit one standard deviation and we took out liquidity right here. And we are at 2 standard deviations, not 2 standard deviations, 2R, then this is just a clear area for me to just take a partial. Now, is this the best way to make the most amount of money? No, but it's the best way to be the most hands-free. This trade would have lasted, you entered here, so 1, 2, 3, 4, 5, 6 minutes. And let's say you risked 200 bucks, you made 400 bucks, you break even. Well, you're up 400 bucks, you lock in 200 bucks, and you break even. So now all of a sudden, the worst case scenario is you leave the markets with 1R, right? Which in this example was 200 bucks. And then of course, you are hands free, you're break even, you don't care. You're just letting it run. And that whole day, even during this large retracement, right after taking out London lows, right? Here, clear objective, London lows, final objective. I would have definitely left on a runner if we already take this level by 11. And then you're just holding and see how we just ended perfectly inside that fair value gap that we had just below. So truly what this was is just a very, very nice trade. That simple, right? And what you had to do is short right after the news and hold on throughout the day. That's why I'm a little bit salty. I took that. Well, I didn't take that when I saw it. I'm just pissed about that, but I can't execute perfectly every single day. I'm not a robot, right? At least that's what I tell myself to make myself feel better. And when you're consistent, missing a setup is part of the game, but it still sucks just as much as when you're not profitable. It just sucks. I see this and I see money. I see this is money that I could have had, that I could have made following my system. But, you know, I guess I still make mistakes. I'm still human, by the way. So that's that. If you did not take this trade, or you held on, for example, all the way to London low, but not further, then you did have some long opportunities. Other than that, I'm not going to consider it longs. Because the truth is, you should have been short and holding. But as I said, both biases could have been justifiable. After we took out London low, could you justify that we are now going to go to these highs that we created? Well, yes, we're bullish mid-term and long-term on our higher time frame chart. So I can justify that after the retracement is done, we can keep going higher. Is this what I thought was going to happen? Well, after London low, I would not have cared. I'd just been break even, not caring about this. But you could justify that after taking out London low, which is also current low of day, right? So very important level in liquidity. You could at least see a retracement. And we talked about this yesterday. When you're looking at a daily movement inside a day, intraday retracements, you're looking at the 15-minute chart. This is where we are at, right? At the point where we took out London low. You're using your premium and discount to find your first premium inefficiency. In this case, it is an order block. I love how I'm showing you guys day in and day out the same fucking logic. And it's working. Sorry, I curse when I get excited. But it's the same thing over and over again. And see, that order block, just look. And what did we do when we tapped into that order block, which was your retracement objective? We created a breaker block. We reversed. And you didn't have an entry. Oh, well, that's awesome. But this is your clear retracement objective, which means if I'm going long, even if I think we're going to go here, this is my partial. So if, for example, I look at where would I look to long? 1050 to 1110 macro. Why? Because this is where price will often spool against profitable AM traders. That's simple, right? Emil always trades these, always talking about it. And we always see these moves reverse and start a retracement at these times specifically. Always. And now if we look at price, what am I looking for? Well, a bullish breaker block. Okay. Well, where is a bullish breaker block in this case? I'm starting to look. I'm looking. Oh, look. The first bullish breaker is right here. If I'm not mistaken, I am going to zoom in, but this looks like a swing low. These are equal, which in my mechanical logic, I do count this as a breaker block, but let's be even more pessimistic. And let's just look at this one, right? Which, by the way, if we draw these highs, we're established a few seconds apart, right? So honestly, it did, oh, well, never mind. It actually changed something. So this would not have been your entry. Well, here actually. if you saw this as a breaker block. But since these two lows right here are equal, well, actually, never mind. The low of this candle is 21,983.25, and the low of this candle 83.25. Yeah, so since they are equal, they're a little hard spot, so let's be pessimistic. You saw this. When were you ready to look for a trade? As soon as this candle closed, right? We took out this low, this high, sorry. And not as soon as it closed, as soon as it took out this level. Okay, what's next? I'm looking for an overlapping fair value gap. Now, is this fair value gap still good? Yes. Right? We mitigated it a minute ago. Is it fair to say that we're going to trade back into it? Yes. So this is your entry. What if I waited until we went lower and took out this level and this level? Sure, right? Also, I seem like I keep forgetting to showcase SMT to you guys, but it's become such second nature for me. I always see it, but this is one that's usually a little harder for people to grasp, right? But there's SMT right at this low, right when we were taking out London low. So all the additional confluence you need is all here. Now, 3PD array stop loss rule. In this case, you have your fair value gap of entry. Then you have fair value gap below and fair value gap below. So my stop is where? At the low of this candle. Once again, seems like it's hindsight, but it is not. Now looking at my retracement objective, which is my partial, it is 1.42. This is one of those trades where I say, that's a little small. That's not the best. So am I still going to take that trade? Sometimes yes, sometimes no. Today, no, because I would have been chasing, because I was still mad that I lost this short, so I just closed my chart. Well, that I lost it, that I didn't take it, right? Julian's not in here, but I joined a call with him right after, and he can tell you I wasn't happy. This was my trade. When I was in it, and it was just slowly grinding. Yeah, I was thinking, is the 50 macro a reason to cut out of a trade? Is it? Do you mean the 1050 macro? Whereas you were in the short and then you're like, okay, well, now this macro is coming. Should I close my trade? Nice. Or do you mean for us, isn't the 50 every hour? Yeah, yeah. So I don't want to deep dive into macros, to be honest, but these 950 to 1010 macros is something ICT brought to light. He says to simplify, right? You can go very in depth into these timings, but to simplify, he says that whatever goes on in here is more important. Now we know that this one specifically, the 1050 to 1110, oftentimes, which means the majority of the time, when I say majority, I mean 60%, over 60%, its job is to start a retracement. I knew a guy who's actually full model, and I just haven't talked to him in a while. Hopefully he's doing good in his trading, but his model was great, and it was all about during our macro, we're going to hit a point of interest. So a higher time frame point of interest, whatever that definition is for you. For example, current low of day or London low is a point of interest. During that macro, we're going to hit this, and then I'm going to trade an inversion fair value gap. And see, he would have had his entry to the tick. I just saw it right away. There's a lot of ways to interact with them. The easiest way is to think that anything that goes on inside of here is the easiest. I saw also Bottom Frag talking a lot about, I see you in here. So he talks a lot about macros. He utilizes them a lot in his trading and always shares them in the chat, and he joins calls all the time. So if you have more questions about macros, I think he's your guy. He's your guy. This is not an endorsement, but I do respect what he says, and when I disagree with something, I say it in chat. And you haven't heard me reply to one of the things he said in that regard recently, so that gives you a good sign. Good job, brother. But from that point on, as I said, the 1050 to 1110, we see this one specifically as a goal to start a retracement or reverse entirely, right? This is due to the London close, right? From 10 a.m. to noon, this has a very specific effect on the market as the London markets are closing entirely. But just to get back to this trade very quickly, the R is too low for me. Now, what do I say you do when this happens? Well, I don't take the trade. Okay, that's step one. But what if it retraces deeper? Is my trade still valid? Yes. The only thing that doesn't change is my stop. So even if I enter on this next fair value gap below, right, which I'm trying to align with right now, my stop will still remain as if I took my entry here. So this just allows me that my trade that all of a sudden was 1.42R, I can now enter and it offers me 2R. Is my trade still good if we retrace inside this range? Yes, it is. And for my hardcore guys, right, what am I looking for? Well, of course, first discount and efficiency, inversion fair value gap, but OTE levels also a great addition. It is very rare these days that I bring them out of my chart, but I just saw the perfect opportunity right now, right? Optimal trade entry. 0.62 to 0.79. 628, actually. Or is it 0.782? Well, as you can see, for me, they're rounded. Do you have any statistics on the percentage of time that macros actually work? Now, here's the thing. Nico, if I was to ask you, okay, well, what is a macro to work? In this specific case, when I'm talking about the 1050 to 1110 macro, I say that when it's reached its objective, it's going to spool against profitable traders. So profitable AM traders. So in this case, profitable AM traders were short. Our objective has been met. Now our goal is to go higher. Okay, go higher up till when? Go higher for how long? Go higher with what entry opportunities? There's so many definitions for it worked. That's why my vision of data is not, oh, well, here's the success rate of this. No, it's, okay, what happens in here? How often does it consolidate? How often does it expand? Can we have some deviations? Can we have some nice statistical timings? How much higher or lower, but rather, will it reverse between 1050 and 1110? Yes. I don't have a specific percentage for you, because the truth is, either I'm already in a trade at this point in time, and I'm not looking to flip, so I'm just holding my trade, right? Mechanical rules once again. Or I'm looking at it in very specific context. Like today, for example, because London low was met at that time, now I can trust that it's going to spool. So I never look at time blank, but since this happened during this time, I trust it more. That's the easiest way to go at it. In the future, I do intend to implement some ICT macros analysis, but the truth is, it's not so much my priority to have full-on ICT. Rice Statistics is not an ICT statistics app. It is a statistics app. And so there will be a lot of ICT content, but it is not a priority. It is not the priority over other things, right? Thanks for the macro knowledge. I didn't know those macros are setting up a retracement when it's its objective. Now, this is not 100%, right? As nothing is. I do want to just remind you guys here. But this is something we see repeat and repeat and repeat always. So, well, you see now I say it's not 100%, but I use the word always a lot of times. Let me use the correct formulation here. My pleasure, Nico. I just thought of macros as just something to have in the back of your mind. Nothing rock solid, depends on where the move is and how extended it is, right? Well, see, once again for us, I use macros a certain way, Emil uses macros a certain way, Bottom Frag uses macros a certain way, and some of my bots use macros a different way. There are so many things you can do. What is this? It's a specific time. Now, as I said, whatever you use, as long as you use it at the right time, it's going to work, right? You want to use trend lines, it's going to work at specific times that are primed for a breakout, whatever, right? So it's just all of these things aligned together is how you can get some trades. Now, do I use macros specifically for specific things, or is there only one good way to use these time periods? No, not at all. A lot of people use, I believe, Bottom Frag, that's what you do, 5 minutes more. So it's 45 to 15 instead of 50 to 10. A lot of people also use 20 minutes, but the other way around. So they separate every hour into 20-minute intervals. Right? There are a lot of time cycles. There are a lot of specific time windows. I personally like to use the simplest option. And this is the only specific macro I look at. Other than that, I'm always trading when I see in front of my chart starting at 9:30, right? The only time variable I take into account is news events, dynamical. I look to trade in the New York AM session, sometimes the PM session, and when I'm looking for a reversal after an expansion, so it already expanded one way and I'm looking for a reversal, I'm going to be trying to frame these trades late in the AM session, 10:50 to 11:10. Does that clear things up for a lot of you guys? Hopefully it does. And by the way, thank you for showing up in numbers on this Friday night. I remember Emil's in here. Maybe some of you guys were in here, but well, Seb, I know you were. But Friday nights were a 2-3 people thing. Yes, sir. I see you typing, Seb. I know. You remember. You remember. So it's just awesome to see everyone joining in here, right? You bring good content and people will come. Well, see, that's what you think. That's what you think. But there's a difference between good content and valuable content. I'm not a great content creator. I'm not great at engaging people, and I'm not great at marketing my stuff. I know my strengths and weaknesses. But I am good at this. So this is something I can help you guys with. Fair enough? I just record these so that the people in another time zone get the chance to see them. Maybe one day on YouTube that will do something. Maybe it will not. But to be honest, my goal never was to be an influencer. So whether that comes to that or not is out of my control. Other than that, I'm not going to consider any PM opportunities. Because if your bias was short, you should have been short early and just held on through the day. If your bias was long, you had an opportunity right here, perhaps even before the news if you're looking to trade that. Personally, I was not. Now in the PM, taking along anywhere here would be greedy. Taking along at the end of the PM, sure, but I always say, are you really going to be trading Friday, the last hour? Which is very high probability, by the way. That last hour macro, very high probability, power hour, very aggressive moves, usually that you'll see a retracement when we've had expansion, but this is just not something that I personally look to trade. So I'm not going to try and recommend you guys trade this, or even consider that I would have looked for a trade here. That would just be dishonest of me. I never look at this. You're so young to understand your strengths and weaknesses. When I was your age, I thought I was great at everything. Well, see, I do believe that. And just ask Emil. I am always telling him, I have a hell of an ego. I am an arrogant bastard. But when I'm not good enough, I'm so arrogant that I want to become good. That's just how it is. So that's where I transform my ego into a strength instead of an obstacle. What are you talking about? You're so great that I'm supposed to pick up my brother at 9 p.m. after the school event, and I'm still at home listening to you. Well, little brother is waiting. He's waiting. That's unfortunate. Now I feel bad, and I want to end this call. Well, thank you guys all for your kind words. I really do appreciate this. I would not keep doing these if there wasn't support from you guys, so definitely appreciate it, and hope I can continue to bring you guys valuable content like this. But just to recap, right, this week was a boring one if you were trading like me, when you only trade when there's high impact news. Truth is, you had some very nice trades on the previous days. I just don't like spending so much time on my charts. As you're learning, it is usually very good to spend a lot of times. I know a lot of my students are demo trading on days with no news and then real trading on days with news. That's also something I can recommend. I appreciate that, Bonfrac. I really do. That is very nice words. See, that's the thing. Most people in this space, and I'm not targeting anyone specific, I'm not trying to throw shade to anyone. I don't believe that brings anything good. But most people are analysts. When I'm doing these price action reviews with you guys, I'm speaking to you as an analyst, and I'm showcasing what I thought as a trader. Like today. I did not execute well. I did not take the trade I was supposed to. I'm ending the day up $300 when I should be up 7-8 grand. That is the truth. And am I mad about it? Fuck yes, I am. I'm pissed. But these mistakes are a part of it. And I can still come to my charts and be, I'm forgetting the word for it, but be impartial. That's what I was looking for. And say, what were the setups? And then I can look at my performance in regards to these setups and be like, okay, well, I should have seen this. If today I was long or short, I should have made money. That's the truth. So now I know that today I made a mistake, and I'm going to be reflecting on this and making sure I'm going to keep making mistakes, but trying to work on not making these again. And that's all trading is. It is constant growth until you are done optimizing yourself. You are now ready to go. Does that make any sense? Sometimes I just think about what I just said and I'm like, I hope they understand. Thank you. Thank you. I appreciate that. Last week I took 2 trades. You made money on them. I didn't. There's a difference between seeing the setup and executing it. Definitely, right? It's one thing for me to show you guys all the perfect setups, but that's why I spend so much time in emphasizing these specific things, that it's always the same rules. Are there any days you don't trade during the week? Is this based on preference or statistics? It is based on psychology, actually. Every single week I have specific rules to engage based on what news there are this week. I share them always. Every single week I do a little announcement at the start of the week sharing the news and my trading days. And if you want to know the logic behind it, you just go to the resources channel, which is just above the stage we're in currently, Rise Trading Model. And if you scroll up in that thread, you'll find, I just want to know what I called it, Economic Calendar thread. This goes over all my rules about how I engage personally with news, all available in the Discord, of course. And that's how I personally look for trades. Now, why is this a psychological choice? Because the more time I spend on the markets, the more chances I have to make mistakes. I am very good at being concentrating for short bursts of time. And that means that if I spend 10 hours in front of my chart, I'm going to overthink. I'm going to overcomplicate my things. That goes to a lot of my mental profile, right? If you guys are familiar with mental illness, I have my fair share. And so I know, once again, my strength and my weakness. And I know that the less amount of time I spend on the charts, the better I perform. So I try and focus on the highest probability opportunities. So that's where the statistics come in. Prince B? Yeah, Prince B. I thought it was Prince Peppa for a second. Almost misnamed you. But basically, I know that the Rise Trading Model is more consistent when just trading on those days. This is something I've talked about in the Rise Trading Model video, right, on my YouTube once again, which I said there are 2 ways to trade this model. There's the way to make the most amount of money, the aggressive way, and then there's a way to be the most consistent, the more consistent way, which is, I'm forgetting what I called it. But pretty much if you trade it every single day, you'll make more money. But if you trade it only on high probability news days, you'll have a higher win rate. And for me, having a higher win rate, being more consistent, is better pretty much, because it means that I am more calm. If I win a lot of times, I am happier when I lose. It is that simple. Conservative. Thank you. Yes, the conservative approach. So that's a question of personal preference, and looking at the statistics, you're going to be more consistent if you only trade those days. But looking at the statistics, once again, you're going to make more money if you trade every day. So it's all about what you want. If I want to make more money, I just risk more. And since I'm more consistent, I'm comfortable with that. But you could also just say, well, I'm going to risk less every trade, but I'm going to trade more. So it all comes down to how you are as a trader. Definitely a lot of ways you can go about this, but both ways have been tested at very great length. And that's actually something that's going to become public. I didn't want to announce it because when I say it's going to become public, it's going to be public probably in a month or 2. Again, I can't have a clear deadline, which is why I didn't want to speak on it. But I mean, you guys are here on a Friday. Least I can do is give you guys a little insight into what's going on in the background, right? So the Rise Trading Model has been fully automated for months, by the way, and has been running in the background for me. I trade it manually still as I'm optimizing the bot, but at some point I'm going to share the results from it from a purely mechanical approach of the Rise model. Some pretty cool stuff that you guys are going to see. So definitely something to be excited about and to stay in the Discord for. before we close this off, do you guys have any last questions? Any insights that you'd like? I'm always happy, as you guys see, to answer any questions. It does mean that we have longer PA reviews, but I mean, you guys are still here. So as long as you guys are here, I'm willing to keep going. All right. All right. Well, no questions is pretty clear. I don't see anyone typing. So we're going to call it a day. You guys enjoy your weekends, right? I say it every single week if you're here on the Friday if we have a PA reviews, but just take some time off, right? And yes, do some backtesting. And yes, review your weekly performance. But I don't know about you guys, but when I started trading, I would do 16, 18, 20-hour days sometimes. And the weekend should be an hour or two. You should go very intensely, view your performance, backtest if you want, and then just get ready for the next week. If you're unprofitable, you should definitely backtest every single day. Just a little bit every single day. I do recommend it. You'll find some great insights. We might want to speak a little bit more about this. We haven't spoken about backtesting in a while, so perhaps next call we'll talk about it more. For now, I wish you all a great night. Have a great weekend, guys, and we'll see each other on Sunday for customary weekly outlook. Guys, have a great night. Thank you.